Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame bullish scenario, as we still expect a move to the upside before then eventually a move to the downside. As in this scenario, we are looking at an expanding flat, which is an A, B, C, 3, 3, 5 wave move, where then wave C is a strong impulse to the downside. In this particular scenario, inside of this wave B, we are then looking for a 3-wave structure in a WXY, which is a 3-3, expecting then another 3 towards the upside, where the most common target for wave B and wave Y over here in green and in yellow are very much intertwined, which is between 31.9k and 32.4k, which is a nice confluence with the 2022 range highs for then maybe a liquidity grab and a move towards the downside in an impulsive wave C. Now, this potential trading setup is then a swing failure pattern type of move where you wick above, close the candle below for then a strong move to the downside, and the close over here is the entry, stop loss above the wick, and then looking for price towards the downside. Of course, you have your own plan. The main question in this scenario is the one that I wrote in the box, which is how much is there still to gain after the double top wick? How much liquidity is there still left for the market makers and the market in general around these levels? Now over here you also see the name Apras, one of the people that commented in my previous video with an indicator that I'll show you in a second. But in general, in the Discord group, many people, also like Kagan and many other people, also in Telegram by the way, are sharing heat maps and softwares and programs and websites about heat maps. And on the heat maps you can see liquidity levels, and some are sharing liquidity levels all the way up to 35k, which apparently is very interesting. But the main problem I have with 35k at the moment in the scenario that price is in right now is that there is no probable Elliott Wave scenario going all the way to 35k. So I would personally be looking around 32k, and also the heat maps are showing liquidity over here, so that is nice. But for the people that maybe don't like to use other websites, softwares and all that stuff, Apras in the comment section, he made me notify about an indicator which is called high time frame liquidity levels. You can find it over here, high time frame liquidity levels. Just put it in the indicators and you'll see it. And then you see these horizontal bars, and the brighter they are, the more liquidity there is around that level. And you can see that around 32k over here, we do have some liquidity sitting right inside the target box for wave B as well as wave Y over here. So that is quite interesting. Now, personally, I don't really use indicators, as you guys know. I only use the CVD really. But maybe some of you like to use indicators and like to use that as well. Personally, I use Elliott Wave knowledge to actually determine the highs and lows for liquidity. So yeah, could be very, very interesting indeed. But of course, price has to move to the upside. You do see fib times on the chart, and these are taken from the high to the low of wave A, and then you double click over here to determine how long it took to develop wave A compared to wave B, or actually the other way around, how long it takes for B to develop compared to A. You see that now this potential wave B has passed the 1-to-1 fib time. Now that's no problem. I like to always be lenient. Between the 0.618 and the 1.618 is the area that I would mainly be looking for when you compare waves, especially in corrective structures. The waves tend to have around a 1-to-1 relationship, or between the two 1.618s. And the 1.618 over here is sitting on Tuesday next week. So price still have enough room to move towards the upside for potentially this scenario, for then a bigger C towards the downside. But then again, the double top over here has been taken, high number 1, high number 2, liquidity over here has been taken, move towards the downside, and I will talk at the end of the video about the probabilities of this particular scenario compared to the more bearish scenario, where we are not going back towards the upside. Instead, going towards the upside is going to be the invalidation of this particular scenario. In this scenario, we are looking for more downside in a wave A, B, and then a wave C. This is also a flat, but it's not an expanded flat where the target over here around 32k. This is a regular flat. And in a regular flat, the most common target for wave B is between the 1 and the 105 Fibonacci, taken from the high to the low of wave A, which as you can see has been very nicely respected, with the wick taking at the same time the double top. In this particular scenario, we're then looking for an impulsive structure to the downside, where this move to the downside is then the first wave, and now we're working on the second wave. So we have a wave 1, 2, and then you expect a much bigger wave towards the downside. There is a little thing that I constantly think about when I look at this scenario, and that is the target areas of the regular flat, which is this one over here between the 1 and the 1.236, which is between 29.5k and 29k. I also, just to be sure, put the target area for an expanded flat on here, which is between the two 1.618s most commonly, which is between 28.3k and 28.1k, and then the 2.618 all the way down here, a rare target for a wave C in an expanded flat at 26.5k. But the thing I'm constantly thinking about is, if this is a wave 1, and then you're going to make a wave 2, then this wave 3 is going to go quite deep. And if we're looking at this as a regular flat, because it actually missed out on hitting the 105 Fibonacci, as you can see, and the 105 is a minimum target for an expanding flat, right? So an expanded flat is actually quite unlikely in this scenario, just from a Fibonacci standpoint. But if you look at a regular flat most common target area, this one over here, and this is wave 1, and you're going to be looking for a 5-wave structure to end inside this area, you can see it's going to be like wave 3 and 5 have to basically be horizontal instead of deep. So it doesn't really make sense to me. And if we take a Fibonacci from the high of wave 1 to then, if this is the pivot of wave 1 at the lows, from the low to then the high over here around wave 2, and we just put it on the wave 3 targets, right, for the fun and giggles, then you can see that the 1.618 target for wave 3, which is usually a minimum target for wave 3, is already at the 1.618s. But the wave 3 can even extend to further prices all the way down, and then you already get close to the 2.618, which is a very rare target for a wave C in any flat scenario. So this being an impulsive move to the downside at the moment, I don't know, it doesn't really feel good to me that this is a wave 1, 2, 3 based on the scenario that we have at the moment, as then this impulse is going to go far beyond the regular flat target, closer to the expanded flat target, even though this, is unlikely to be an expanded flat as it didn't even hit the 105. So maybe we have to think about other structures, but time will do its thing, and throughout the weekend we will observe what will happen. And talking about the weekend as well, I want to go into the micro, because the weekend is of course famous for its ranges. And when we look at the price action that we have locally, first of all, I like to highlight this resistance area over here that we were looking for, right? Because we had some bullish divergences, and I mentioned I prefer a move towards the upside in the previous video. Now we got that move to the upside very nicely, didn't yet hit the target box over here, the resistance area between 30.5k and 30.7k, which is very interesting. The question is, are we going to reach it right now? Or are we going to get a weekend range first, moving down, moving up a bit, and then maybe price is going to range over here, and then Monday, poop, take the highs, damn, go to the downside potential, right? Because if we look at the Fibonacci pools that I did over here, then either if this is the low of the move to the downside, right, over here, for then potentially a wave 1, for example, and we have this as a WXY scenario, then the most common target area for wave Y is between the yellow fibs, taken from the low to the high of W to the low of X. And as you can see, at the moment, price is ranging right inside of these fibs. Now, potentially, price can wick the high of W and then still close inside the common target for Y and move to the downside. If we take this low as the low of this move, then this move towards the upside is, or most likely, regarded as some sort of an ABC or complex structure over here. But then again, the target area of a wave Y as well as a wave C is between the 1 and the 1.236, taken from the low to the high of A to the low of B, with then inside B this expanding flat structure, and then we get a move towards the upside, where if this is a 5-wave move, one can argue it's potentially not yet finished, take the high and then move down. But both of the fibs are ending around this level, not hitting the target area. So what I think could be quite interesting for the weekend, again, as it is famous for ranging, is to, maybe wick above, potentially, but eventually move towards the downside in a bit of a range, maybe create some more bullish divergences over here, then higher low in price, lower low on the CVD, for then a move towards the upside, where we take the target of the CVD, enter this target box, and then we wait and see. Because of course price can continue for the expanded flat target, or it can reverse for the more bearish target and then potentially a wave 3. Of course, there's always the scenario price is just gonna dump to much lower prices, but in a weekend usually the range has more probability than very impulsive moves. If we zoom out to the 4-hour time frame, I want to show you this range, even a 12-hour time frame, and I added something about this range, which is a target area. So in previous videos, I didn't have any like real support in between this target box around 29k and the one here at the lows at around 26.4, 26k. But I decided to, after actually talking about this range in the previous video, to put this over here as a support area, because it can be very important in the more bullish medium time frame scenario, where this is a wave 1, then you get a wave 2, for then eventually maybe a wave 3 to the upside, hitting the point of control. But also something I like to show you is the golden pocket that you take from on the 12 hour, from the red candle over here to then the high, either or. Let's take the left because that's the end of the impulse, and then a 1, 2, 3, 4, 5 wave move, and then you put it on the golden pocket area, and you can see it is in perfect confluence with the point of control. And that is the reason why I now made this a support area as well, between 28.2k and 27.8k. So you can also write that one down if you like. If we then go back to the lower time frames, I already spoke about the bullish CVD divergences, higher low on price, lower low on the CVD, which on the CVD chart looks like this. If we go to the 15-minute, I already mentioned it in the previous video, higher low on price, lower low on the blue CVD, bullish CVD divergences, where then the target is this high. Now for a short moment, we also had a lower high on price and a higher high on the CVD. However, most of the time where that happens, you have to think that the first CVD divergence that you get is preferred. And actually when I go to Discord, I spoke about this as well, where I said that if you get bearish CVD divergences, the first one that appears, bullish divergences, were the first one to appear and therefore get preference. So if one would potentially trade this bullish CVD divergence and then you see the bearish ones, of course, one has to manage it well, maybe the stop loss break even or whatever your plan says. But just know that if you get a bullish CVD divergence and then afterwards a bearish one, or the other way around, doesn't matter, but the first one is the preferred CVD divergence. So in this case, we had the bearish CVD divergence over here on the chart. We got the bullish first, and the bullish one played out, taking this high very, very nicely. For now, a neutral CVD stance. I mean, if we look and zoom in to the 5-minute, then what do we see? Maybe a bit of bullish CVD divergences on the 5, right? Higher low on price, lower low on both of the CVDs, where then the target is going to be taking this high, and then we wait and see. Maybe it goes to the target area. We don't know, as no one knows what price is going to do. Then the probabilities. Well, the probabilities are, well, even though it's quite difficult to say, not gonna lie, I do this quite spontaneously most of the time, like on the low time frame between the scenario going up in an expanded flat and then going down. What is very nice is, of course, that you go up, you take maybe more liquidity and you move to the downside. But at the moment, with the structure we are forming, there's not yet any signs we are gonna go up again. But in the more bearish scenario that I've showed earlier, with this then being a 2 and a 3, the targets that we have for potentially a wave C are not really matching up with this being a wave 1, 2, and then a bigger 3. So that is why what I want to tell you is I want to see the reaction. If price is going to go up here, I want to see the reaction over here. And that is going to make me give the exact probabilities for the different scenarios. It's all about the reaction for me around this area over here. So it's about patience, it's about discipline. And that is also what trading is. It is not always 100% clear. For me, the scenarios are almost like 50-50, or maybe, you know, in the end, we expect downside, right? Like that's what we're going to be looking for. The only question is, do we go up first or do we go down? But I think we will have a proper indication if price is going to go towards this area. And then whatever is forming over here, moving to the downside, maybe bullish divergences or bearish divergences, we get a bit more insight into what is going to happen next. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.